Everyone, welcome to this crazy week. We've got Microsoft, Google, we've got the Fed, we've got jobs report, we've got tensions rising in the Middle East, Putin getting emboldened, China all of a sudden starting to act up a little bit, supposedly with Taiwan. So this is a really good time to follow through what we talked about last week with a few instruments. We'll take a look at Microsoft and Google, how to play them on the earnings, and just for consistency's sake, by the way, this is Mish Schneider, Chief Strategist of MarketGauge.com. Date is January 29th here in the States, end of day. But I wanted to start with the dollar yen soup. We talked about it. And what's so interesting is with war now in the background, essentially what usually happens in that situation is the dollar can actually wind up devalued to pay for the things that we need to pay for. That's the word. I mean, we know that the dollar can do pretty much anything, but right now, let's take a look at it against the yen. And the biggest thing I'm going to mention, I don't want to spend too much time on this, is remember that big bar that we talked about last week, where the high was 148.38, the low was 146.65. Well, guess what? In the last 3 trading days, we're still in that range. I think that just makes it pretty simple. Write down these levels, 148.38, 4. As the high, we get through it. I think we'll see some follow through. I don't think it necessarily would be a lot of follow through, but it would mean more strength for the dollar, clearly. And under 146.65, the opposite, I think that we could see the dollar going down against not just the yen, but maybe obviously the euro as well. And of course, we know where our next major support would be because we can just see the 50-day moving average and assess that at around 145.58. Moving over to gold. Again, so range bound. I mean, obviously there are many instruments that are doing much better, but if we're just looking at gold, remember last week I turned my attention to silver, and we'll take a look at that shortly. But the gold still has things to prove, and of course the biggest thing to prove is that it can get through this 50 level and also get through today's high. I think was around 2045, depending on the instrument you're looking at. We need to get through that 2045, 2050. But near term right now, as we're going to go into Tuesday's session, just keep in mind that all these levels right here are slightly below what we're seeing in the 50-day moving average, which note has a very sharp upward slope, so that's good. But 2031, I think, is your first pivotal area. Let's call it 2032. We get through that. Obviously, we're looking back at over that 2032. What can happen from there? I think, your next real area of good resistance is going to be up at around 2040, and then this is obviously spot. We're going to be looking more like 2050 to 2055. We get through there, and then things are heating up. On the downside, of course, let's just take a look at the body of this candle today, along with some of the levels that we've seen pivotal around it. And under that 2020, I keep talking about that 2020 level, that's been so pivotal. Under that, you've got a little bit more of a negative bias. As long as we hold it, I think the bias is positive, and like I said, above 2032, even better. And also what's so interesting is we did get that mean reversion in momentum in gold right at the lows. That's so nice, this real motion indicator. And so we tested, we couldn't quite get through the 50, so there was a little bit of a bearish divergence. We talked about that, sitting back on the Bollinger Band now, and this bit of a pop. So watch this momentum as well. But I'm still really bullish longer term in gold. I just think basically what it's doing is dancing around. So let's take a look at silver. I love this day in silver because, because I'm long, that's part of the reason, but also because we've been really tracking this for 2 reasons. One is it's so underperforming everything and so undervalued compared to the rest of the market. And number 2 is that we were waiting for this mean reversion, which happened clearly today. Number 3 is we really want to see whether or not this can wind up outperforming the gold, which would be a very big inflationary factor. So as we're looking right here, we had really kind of nice bottoms down here, but let's just look at something since I've talked to you last, which was what I said basically was over 23. In this case, we're looking at 23.15, so let's move it down to actual 23. So 23 is going to be a pivotal area. We hold 23. I think that this has more room to the upside than the downside. I really like the way this V bottom looks. And from 23, obviously, we have to get through 23.40. And then, of course, then we start running into our indicators here. Now, what was also so interesting is just look at phase. This was a death cross bear phase. We never quite got back above the 200 in phase. So with the price underneath, the 50 crossed over the 200. That's so interesting to me, because what that tells me now is that, first of all, this is not a bearish phase anymore. This is more of a distribution phase. And two is that if this is any kind of signal with an upward sloping 50 overhead, the price will be like a magnet to those moving averages and get us back over 23.76, and of course back over 24. I think we're looking really strong. So remember these kind of levels right here, 23. I think if you want to look at something a little bit shorter term in terms of support, you're going to look at 23.15. Then to the upside, obviously this 23.40, 23.45, and then keep your eye on these moving averages. And here's your mean reversion and momentum, so we really like that. So here's crude oil. One would think with the drums of war, this might be higher priced, but nonetheless, there's still a lot of supply, and I think that's part of the issue. Little questions about demand. So all it would take was something more catastrophic to happen with Iran or Iraq, with U.S. intervention, that would take this thing skyrocketing. So what would that have to look like in terms of price? Well, right now we can see that the 200-day moving average is right here at around 77.60. And it looks like so far we look like we're going to close below that, because we're trading currently, as we're starting to close the market, at 76.93. I think they're going to mark that as its closing price. So if we come in tomorrow, let's take a look at these levels right here. I would say 76 to 76.15 is your support. Want to see that hold. That doesn't mean it would be the end of days if it doesn't, but that would be my initial area to be looking at tomorrow. We hold there. Obviously, the next point would be any kind of a move and hold over the 77.58, which is that 200. And of course, if we can get back over 78, that was our other pivotal area we talked about last week. And 78 is kind of like right here. Let's make that a little bit tighter. Let's call it close enough, 78.02. Notice if we just go back to the left, it's where a lot of the highs were back in that area in November. It was where the high of the body of the candle was last week. And we were over it this morning and have failed it. So let's call that 78.02 the most pivotal. Through that, I think we get more bullish. And then, of course, then we can start looking at our resistance up around 80. Through 80, though, again, it may not be necessarily the technical resistance that happens, but more like how much more buying interest will we get, particularly short covering, because it will look like stuff's getting real. Now, right here on the momentum indicator, we are above the Bollinger Band, so that's good. We are right back down with no divergence, bearish or bullish, because this is below the 200, that's below the 200. So we're going to keep an eye on this also. If this thing pops up to more of a bullish divergence, that's also going to give us good information. There's absolutely nothing about this that looks even remotely interesting. It's in a world unto itself, or the widow maker world that people like to call it. So you can see this incredible drop underneath the momentum indicator here on the 200, which was also already signaling maybe it was going to hold, but we could not get through these moving averages last week, so that was negative. We have a death cross here, and bam, here we are back at levels we haven't seen really since here, which was in February 2023, so like a year ago. So, I mean, how much cheaper can it go? I don't know, but it's not something that I would even be remotely interested in trading in. However, if you are so inclined, then you will at least see this get back over, I'd say 220, 221, to see at least if you can get some kind of move to fill the gap. I could see where it might overshoot the gap at 235. And in terms of downside, how much further can it go? Well, I can just tell you that this low was at 194.40. Quickly on SPX, another new all-time high. Market is happy as can be, and so that's hard to argue with. So the only thing we can say right now is, after a couple of days of consolidation, remember I was showing you about how when you have an inside day, you want to follow it up when it takes out the outside day. So clearly that happened today, just like you'd want to follow it down if it breaks down under the outside day low. So that means right now that this outside day high, which is at 490.03, becomes your immediate area of support. How much further this can go, we don't know, but this is where we have to take a look at momentum. And the momentum did clear all of this with the new high, but remember I was showing you that momentum back here when the price was much lower was much greater. So we're running a little bit rich. We're running out of momentum, and of course that's a great entree to a lot will depend on what happens with some of these big guns earnings. So let's do a very quick look at ahead of the earnings report from Microsoft and Alphabet. So a couple of things to be aware of when you're looking at Microsoft. Number one is momentum has improved, but it's actually interesting in that the 200 is above the 50, so there's still a slight bearish divergence here when it comes to momentum, plus we haven't cleared the Bollinger Band. So with earnings on tap, that's something to keep in mind. If the earnings don't come out as great as people think they will be, it is possible that the momentum is telling us something, but we don't know yet. Also, in terms of the relationship to the benchmark, the SPY, obviously you can see it's clearly outperforming. And on the 6-month calendar range, which I haven't really talked to you too much about, but it's a range that establishes probably for the next 6 months into the year, we've clearly got through it when it went through 394. So what I think is the more interesting chart on this is the weekly chart. And I'm going to actually the monthly chart, and I'm going to show you why. Forget about the moving averages here. Let me just show you what I was looking at when I was looking at the moving average, which is some kind of measurement. So we had this, let's say, was the high here, looking at this rounded off 350. And this was the low here at 215. So, you know, we're talking about 85 and 50, we're talking about $135, right? So when you get a neckline breakout like that, $135 could be somewhat of a measurement. So if you're going to take that high of 350 and you're going to add about $135, that's going to put you at about 350, 450, kind of like more closer to maybe 500 or 485. So that's kind of like what we're looking at right here is maybe 450, 485 is where this is going. Obviously, the earnings report will help potentially get it there like it did with Microsoft, that huge, or it gets short of that and starts to come down. In terms of actual numbers, all I can say is here another example of an inside day coming into today that we took out the outside day high. Actually, that's a monthly chart. Sorry, let me go back to the daily chart. We go back to this. Well, we still had an inside day coming into today. And so we took out the high. Clearly, you can see here the high of this day was 407. So that's going to be your first pivotal number to look at. Under 407, we may see it go back down to around 402, possibly even that 395 where the calendar range broke out of. If it holds above that 407 number, and here we are at 409, it may just chop around ahead of earnings. And like I said, 450 to 485 I think would be a decent target. Google actually has better momentum. You can see the momentum here is broken out of the 200, the 50, the Bollinger Band. It's actually the highest momentum we've had in a very, very long time while the price is going up. In some cases, this looks healthier than Microsoft. And also, it's also outperforming the benchmark, but by even a greater percentage of what we saw in Microsoft as well. That's really interesting. And here's the 6-month calendar range at 145, so you're about $8.50 away from that. Also an inside day, so let's use the same principle, right? The high of the outside day, 153, so it closed right above that. Let's call that 153 pivotal, at least if you're looking to do some kind of a day trading on this tomorrow. We hold 153, that definitely looks more bullish. Same thing with 150. So 150 to 153, that's your initial range. We break down under 150. It's very possible this thing goes back to test around 147. But I want to take this to a little bit of a wider time frame here and see if we see anything. Clearly we've taken out highs here. But in terms of the weekly chart right here, you can also see that this is great support. So even if we broke down, probably be a really interesting buy at around 140. And if we go to the monthly chart, like I showed you there, let's see if we have anything as pretty as Microsoft. We do. We have the high here. Let's call it 150, just again for round numbers. The low here at 84. Well, let's call it 85. So that's $65. So a $65 move over 150 brings you to 215. So that would be also a reasonable target here. But of course, all this remains to be seen, but at least now you have an idea of what to look at as we're going into earnings tomorrow. And I'll be back with you again tomorrow after the earnings report. So you all have a great day. Happy trading, and bye for now.